Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, December 21st, 2020. I think this warrants a video early on today. Seen a lot in the charts, a lot going on. Yes, it is the week of Christmas, so chance for whipsaws are increased, but I'll tell you right now, the sell signals look pretty good. And again, this has been building into the charts for a while. We got the early sell signals last week on Friday, and follow through today. We broke the levels I wanted to see, and that's number one. This breakdown in SPY. This is a 60-minute chart of SPY. This is a trend line that said we needed to see SPY break. I wanted to wait and see how the markets traded once we open. That's when the institutions come into play. They can't actively move around in the after hours or pre-market session, especially when trading volumes are low. So you take all the moves that you see in the futures, if you get a breakdown, that is, with a grain of salt. But if you follow through, and that's what we have in the regular session, that helps to confirm it. So as of now, we have a confirming sell signal, or we did it on the first candle of the day. These are, again, 60-minute chart. There's our first candlestick. And that is, it's there's 6.5 hours of trading in a day, so that's our 10 p.m. candle. So it's really 30 minutes on your first candle, but still, it's a 60-minute chart. So there's our solid close and so far red candle. So anything's possible, but the fact that we've seen follow through, it increases the odds that the breakdown will stick, and that's it. So it's early on, and it's your confirming sell signals. So if you took a starter position last Friday, or you wanted to hold off to see confirming sell signals, there it is for you. And again, whether they play out or not, it's like anything else. Take the signals, pass if it's not where you think the market's going. But as of now, they look about as good as they get. Now, if we kick back, your objective entries or add-ons would be a kickback to backtest the trend line. Anything's possible, but we may or may not do that. I think there's a lot of hot air in this. I know there's a lot of hot air in the market. That's not opinion. It's fact. There's a lot of documentation on that. The type of traders, a lot of retail traders, hot money, extreme overvalued stocks right now. So when that happens, it increases the odds that when the trend finally does break, and the tide finally turns, that you get a rush for the exits. And these are to me pretty obvious levels, so I assume a lot of other traders are watching those. And the fact that we're down, remember Friday, the drop or early into the day, before we had that late session reversal, was one of the most impulsive drops we had. And today's again another impulsive day here. The S&P 500 is down about 1.6%. So if the breakdowns stick, the SPY, I think the S&P may keep up or even outperform the Nasdaq 100. Usually it's the other way around, but the latest news today, and you can if you want, assign the news headline to the drop today. I always say the charts and the news go hand in hand. This breakdown was priced in to the charts, and some of the headlines coming out, and I think they're attributing the drop today as a new strain of the coronavirus. Surprise, surprise. I talked about that a few weeks ago, how viruses mutate, and so there's supposedly a new strain out there in the UK that's super contagious. 70% more contagious than the previous strains. Early indication, I glanced the headlines, and they're guessing that it's not going to have the vaccine will still be effective against it, but that's a big guessing game. And so I can tell you a lot of the rally up over the last few months has been on hopes of the vaccines coming out, and as they're just starting to roll out, now you're getting news, which I said would happen sooner or later, that the virus is has mutated. And we'll see. Again, believe me, I hope these vaccines are as effective as they are saying they are. But this throws a little bit of a wrench into things, and it just shows you that over time, viruses are tricky. So we'll see. And again, that's fundamental stuff. Let's just forget about that for a second. We all have our thoughts as to where coronavirus is going to take things and how bad or not bad it's going to be. But if you're a trader, you can sit there and guess that all day long. I can just tell you right now, we have the best sell signals that we've had in months on the market, and take them for what they're worth, or don't, or you can pass. SPY, that's SPY. There's a breakdown. ES are the futures, and there's a comparable trend line I was sharing, and that was taken out with conviction. And this is a beautiful, or at least an objective reentry. Let's just call it that. There's a breakdown. It's very impulsive. Here, I'll zoom in a little bit for you. So we took it out. We broke down into the early morning session. We reversed, and boom, a back test. It doesn't get any better than that. You know, the breakdown was early. I imagine a lot of traders were asleep or not in front of their computers yet. Not too early today. I mean, into the low. The breakdown occurred. If I can get this here. Yeah, that's late in the morning. Is that 3 a.m.? Let me see here. Either way, it was an overnight session. But now, even better, had you taken that, you would have had ridden back the snapback rally. So all I'm trying to say is we had a kickback to backtest the trend line, and that's what I mentioned this morning on one of the charts. That's an objective entry. You either short a breakdown of a well-defined pattern, a bullish, bearish rising wedge, or whatever you're looking at. You short the breakdown, or an objective entry comes on a back test with a stop somewhat above, ideally on a solid 60-minute candle close. You want to avoid little whipsaws. The market's going to be whippy right now. So that's it. That's whether it works or not, it's all about looking for objective entries and then placing trades with attractive risk reward profiles. In other words, your downside is minimal. You're talking probably you could 1-2% or less on your stop, and the downside potential right now is quite large. And I've given you some near-term targets for active traders, but again, there's a lot priced into the charts. A lot more potential downside, especially if the tide changes and all of a sudden money starts going out of the market. There's a lot of hot money in the market, and when the hot money exits, if it's all happening at once, the downside potential is quite large. So, all right, let's change gears. Let's look at the NASDAQ 100. This is NQ, the NASDAQ 100 futures. We were just looking at ES, the S&P 500 futures a minute ago with the back test there. And that's why I like to, watch them both in your trading. So we had sell signals last week, a breakdown of back test, that nice, clean, bearish rising wedge pattern. Hit this level on Friday, and as I said then, we had an intra-period break snapped above it. I said your next sell signal would come on a solid break below 12,676. And that's what we had last night. And there was a very near back test at the same time ES back tested. So the takeaway from this, if you're just say you're only trading NQ and you were waiting for a full back test to that level, well, if you were watching ES, you would have said, well, the S&P 500 is actually more actively traded than the NASDAQ 100. So you want to maybe assume that a lot of traders are going to step in on that back test, and that's why this one fell shy. So when looking for an objective entry, I would always, if my plan was to short a back test, short when the first of the two hit, and that I can tell you the trend line on ES was much better defined than this 12,676 support level. So that was a more significant level, and therefore that would have been your objective entry on NQ, re-entry or add-on or whatever. So that's it. You guys know the targets. They were laid out. They're in static charts that were posted last week. And then QQQ, and then we'll move on and look at a few other things besides the market. QQQ, there's your breakdown last week, and moving lower, selling starting to accelerate, first target, second target, so on and so forth. Divergence has been building for a while, so there it is. Everything's priced into the charts, and there's no guarantees, but I said typically this is a week I take off, but I'm also here. I'm working from home this week, not taking vacation, so I'll be around, and there may be trading opportunities. It reminds me of, I talk about this every now and then over the years. Makes me think of the Tet Offensive. Tet's the Chinese New Year, and during the Vietnam War there was a big strike by the Viet Cong and North Vietnamese army against the U.S. forces and South Vietnamese, and it came during the Tet, Chinese New Year. I think it's in late January, and the whole thing is that forces, the U.S. and the South Vietnamese figured, oh, not going to attack. Everyone's partying, having a good time, it's a celebration, and it was considered one of the most effective offenses by the Viet Cong and North Vietnamese because again, U.S. and the enemy or our forces were asleep at the wheel. And the same thing can happen during the holidays. Everyone thinks nothing's going to happen around Christmas. There's our breakdown. So, by the end of the week, we could be down substantially. And think about all the profit taking that may happen by the end of the year. So, anyways, it's there, guys. It's no guarantees as where we're going, but there could be some money to be made this week. And say what you want about that, whether that works out or not. I can tell you we have some pretty good sell signals as of now. All right, let's move on to the next thing. That would be copper. Okay, copper is one that I've been watching for a while, waiting. I started outlining this as a short trade setup a couple weeks back, I think it was. And so boom, it broke down. And as I said in one of the updates recently, copper is going to move as most industrial metals will with the stock market. Stock market goes up. That's assuming the economy is growing. Therefore, it's going to assume demand for basic materials, copper, lumber, things like that. And likewise, if the market drops, and that's assuming a turn or a slowdown in economic growth, and so those these assets that are often correlated with the stock market will tend to fall. So it's what I'm getting at. It's no coincidence that today we have a breakdown on copper, along with those breakdowns on the stock market, and there it is. We're just below there right now. Broke down. We're below the trend line now. So it's the same story. Whether it pans out or not, maybe they come in and ramp it up maybe they buy, maybe there's window dressing and the funds want to show that they're long a lot of things, in the market and maybe copper too. But all I can tell you, it's objective. You can short here. We're right below the trend line with a stop somewhat above, ideally this is a 2-hour period chart. Every candle's 2 hours, so maybe a 120-minute candle, solid close back above. And I would also keep an eye on the stock market. If the stock market remains on those sell signals, in other words, ES, NQ, SPY, QQQ, all remain below trend, then you might want to give copper a little bit more room because any move back above will likely prove to be a whipsaw if the stock market's going lower. So again, I would put these two trades as being fairly correlated. Again, with the stock market, what does that mean? Well, if you're going to short NQ or SPY right now, and you're going to short HG copper or the ETN, which I'll cover here in a second, just keep in mind that you're probably going to be right on both or wrong on both because of the correlation there. Not always. That's not a guarantee, but it's the most likely scenario. Let's just put it that way. All right, copper daily chart. There it is. Boom, big red candle. Early in the day, I have to say that the day is young. A daily chart, you want to wait for a solid. Well, confirmation will come on a solid close, but it's pretty impulsive. The fact that we have the breakdowns, the markets broke down on Friday. Remember, today we had those confirming sell signals, so which increases my confidence that this breakdown will stick, and plenty of downside on copper. I mean, even from where we're at now, another 4% to that first target from where the breakdown occurred earlier today, and we're about almost 6%. And the divergences say there could be a lot more in the coming weeks to months here. All right, so that's copper. Now let's speaking of metals, let's talk about the U.S. dollar and gold. I've been highlighting this setup in the dollar. Really nice, well-defined downtrend line. This is DX dollar futures. You can see right up here in the top corner. And these are it's an hourly chart, meaning every candlestick is 1 hour of trading, and we're going back for 3 months here. All right, so there it is. We broke out and we're back testing. This is an objective long entry on the dollar. You can trade dollar futures, UUP, or the takeaway too is what impact this might have on gold. So if this sticks, and it's like I said, objective here with a stop somewhat below if we fall back in the wedge. But if it sticks, you would expect a reversal and a rally up to my first target there at about 91. Pretty darn good resistance. If that breaks, if we break out, I would expect a reaction if we get there. At least some consolidation or pullback, and then if we break out above 91, then that will most likely trigger a lot more upside in the dollar, and that net is, factoring it as bearish for gold. So there's a chance here, and again, we could see the stock market and gold both drop. Quite often gold will go up when the market falls, and vice versa. But again, so I'm watching this closely. Maybe this breakout fails. Maybe this is just a whipsaw signal because the holiday trading. But as of now, taken on face value, I see a breakout and a back test. So unless that back test fails with a move back down in here, that is bullish for the dollar. However, a little more work to be done. So I'm showing you a back test here, but I'm going to look at the euro US dollar real quick. If I can load that chart, EUR USD, and let's look at it here on a daily time frame. Daily time frame is more significant than that 60-minute time frame we were just looking at. So what I see is, we've been building these big divergences for a while. Negative divergences continue to build, which says we're probably looking at a pretty big reversal in the euro US dollar pair. So in other words, when this goes down, this chart, when it's falling, the euro is dropping against the dollar. The dollar is going up and the euro is going down. That's why euro's first here. So think of this as the euro just plotting against the dollar. There's your uptrend line. So right now we had this little whipsaw. So the breakdown you see, or the breakout in the dollar in the back test, that's where this big shadow on this candle is. So it's showing you that yes, there's a back test in the dollar futures, but you have to keep an eye on this pair because the euro is by far the biggest component of the US dollar index. And right now we do not have a sell signal on the euro US dollar. We had an intraday brief break. Remember, these guys trade around the clock. It happened before the market opened, I believe. But we're back above that trend. So we snap right back up, and we do not have a daily chart. All that matters, or the most important thing that is how these daily candlesticks, where they close. So you get what you need to see for a sell signal to be confirmed is a big red candle that closes down below the trend line. And right now, we're still above trend. So I just wanted to say that. So yeah, we'll know soon. Well, that dollar index futures, the dollar futures are back testing. So if they start to rally, especially if they go to take out the recent highs on DX that I just showed you after the breakout, then you're going to take out this low here, and then would be a sell signal. And just like the dollar futures, remember, let me just jump back to that real quick. See this big level right here, about 91? If you look at euro US dollar, there's that big level. That comparable level would be about the 129.43, so almost 121 in the euro. You have a lot of support right here, recent support that is, and so that's what you want to see, and that's what would be my first target, minimum target. Probably get some reactions there, some consolidation at the very least. Could be more than that, could be a back test or anything else if we get there. But then a break of that level, that 121-ish level, would be quite bearish for the euro, quite bullish for the dollar, and no bueno for gold. Remember, big ifs, they haven't happened yet. We don't have the sell signal on the euro US dollar, so we'll watch all those. We'll watch the euro, watch the dollar, and watch this pair as well. And then one more, that if we get, number one, if the breakdowns in the stock market stick, and number two, if they really begin to play out for a healthy correction. Still work to be done. Again, you have to take anything that happens this week with a grain of salt. Doesn't mean that breakdowns can't stick, just means you have a higher chance of them being whipsaw signals here heading into the end of the year. But if they do break down, lumber futures, I think, have a huge potential as a short trade. And I've covered that LB and I covered a few different charts, but there's a most recent trend line, big divergences right there building, and I think this is one on my radar. Need to see these break down. I'd like to see a little more evidence that the markets are broken down, and if you start seeing the S&P 500 and the NASDAQ dropping, let's say another 5, 6, 7%, I can almost assure you that lumber will play a game of catch-up. So I wouldn't mind to see lumber prices hold up for a little while, see the stock market have a decent correction without lumber realizing that, and then jump into a lumber short. Because it'll most likely, again, play a game of catch-up to the downside. So a little bit of work to be done. There are no ETFs out there that track lumber prices directly. You have Wood and Cut, but they don't track lumber futures. they hold a basket of companies, timber and forestry companies. They're going to move up and down with lumber prices. They do correlate very well, but I just want to mention they're not, unlike a lot of ETFs and ETNs out there, they don't track the futures. CPER, for example, I showed you before, tracks copper futures. GLD, the gold ETF, tracks gold directly. Wood and Cut, which has broken down, by the way, and this is sort of probably telling us where lumber is going, that these companies are breaking down. There's a sell signal in wood, right below the trend line, and then cut. Let's see, I haven't updated this chart forever and a day, but let me just draw a trend line there. Boom, there's a breakdown as well. And that would be a first target. I haven't updated this chart for a while, but I can tell you that's first support or first target about 29.75. So there's your trade ideas for this week, and maybe heading into the beginning of the year. I'll do a follow-up at the end of the day, especially if anything big happens, any big reversals or any more downside. But as of now, we again have some of the best sell signals, or really the first sell signals I've seen in the stock market in quite a while. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.